Yeah, I don't really. Peter had some questions about. Peter, you still here, or did you check out?
Oh, I'm here.
Oh, well, ask Ira what you want to talk about.
Yeah, Ira, so there's all this trade conflict going on, and there's all this really steep decline in the yen price. And I'm like, is this directly related as a policy lever, maybe, possibly by the Chinese government?
What, in reference to the yen? Because the dollar yen is actually, dollar yen's going lower, so the yen.
I'm sorry, dollar yuan.
Oh, okay, good, all right. So I am listening closely when you say, but I don't think so, Peter, because I just think it's market action, market forces. I think there's maybe some people who have some yuan exposure who are covering it up, not sure how this is going to play out there. And it's not like the yuan really. Let's look at a chart of some duration, not too long, but a year. I'm going to put up a daily chart. So
okay.
If you look at it, let's look over the last year.
Are you looking at the offshore? Or are you looking at the?
I'm looking at CNY. CNY.
Okay.
I'm looking at the cash. Okay. So if I go back to let's say I'm going back to July. Yeah, we're up a little bit, not a whole lot, a few percentage points, and actually we're well off the highs that were made in November when of course, we were getting all that volatility in the U.S. equity markets and everything else, and the emerging markets were all under pressure. So I don't know. I don't think it's an orchestrated attempt. I don't think the Chinese would play that game at this point. They don't have to, especially because, again, I can't stress enough to everybody, you have to pay attention to Bob Lighthizer. He's a significant player here, and he has a currency bent. We haven't heard him talk about it, but this is the guy who really grew up with the Plaza Accord. He was really James Baker's chief lieutenant, and he's a tough negotiator, and he understands this. And I think that's his whole card that they wouldn't want to play yet. And I don't think the Chinese are looking to anger Lighthizer. They respect Lighthizer. Who else they respect, I can't tell you, but they do respect Lighthizer. He's a tough negotiator, and he knows his craft. This is a guy who's been on this trade issue from the private sector because he worked at Skate and Arps in the, representing the steel companies in America, doing a lot of litigating on this. He is well versed in this. And he knows what's going on. So I don't think so. I'm giving you a long answer, but I don't think so. I just think it's market forces right now, especially because, as we've talked about earlier, it's the emerging markets across the board. The Turkish currency can't get a rally. I see the peso did nice call, Judd, on that 200-day because it really held it this morning. And now, of course, it trades with the speed.
It's already come back into the soup.
Yeah. It's so I don't think so. I really don't. I think the yuan will, because China doesn't want to piss off the rest of the world either here, and if they were to start putting downward pressure on the yuan, the Japanese would get pissed, the Europeans would get pissed. So it's not in their interest. Just let events in that regard unfold and not press it. So I really think that it's market forces at this point in time.
Good to know.
Yeah, Matt and some of the guys were talking about this last Real Vision conversation with Kyle Bass.
Well, I didn't say. Oh, the last one when he was looking for the yuan to get destroyed, but they've been on that mission for a long time, and I just don't think it would work out well for the world. I'm on the other side of that coin. I could. This is all theoretical. Well, yes, I know but a lot of people lost a lot of money, almost as much shorting, Japanese bonds over the last 20 years, trying to break that Hong Kong peg.
What's a symbol?
I don't. It used to be. Hold on. IUSD HKD. Let's see if that. I don't really watch it anymore because I get to watch the. Let's see if that works. Yep, still good. IUSD HKD. You could see it. It had some significant move down because it trades with the U.S. dollar. Don't forget. So when the dollar got a little strong, it went with it. Now we're kind of back into this 7.84. So it's held here. Let's put up a weekly chart. I'm on it now too. I don't watch it. You can see when it's. Look at that. If you go back to 2012, 13, 14, it is interesting. I'm glad you bring that up. Are they going to break the peg? I don't know. I don't know. A lot of people have lost a lot of money, and I'm sure there'll be a lot of money to be made when it does break. But it will be a sizable event because the Hong Kong authorities the central bank has proven to be quite a foe, and they'll come in their stock market. They'll play this a lot of different ways. So they've made a lot of money defending this peg because when they've taken on a lot of investors, they've prevailed over. This is what I know for 1999, Hong Kong was given. British surrendered their authority over Hong Kong. So it's been going on for 20 years, certainly. I don't know. I should watch it more. And listen, I have a lot of respect for Kyle Bass, but he's been wrong about the Japanese bonds. They keep coming to these plays, and sometimes you take on government forces, and it's like the bond vigilantes taking on the Fed during the height of QE. It was a losing proposition at first. Don't forget when that yield curve, when they first started QE1 and QE2, the yields on the long end, the 10 and 30, went significantly higher. Because everybody thought they would be successful in creating the inflation that they wanted. But the amount of QE, $85 billion a month at its height, was just too much for market force. Nobody could take them on, no matter what you thought. For all the people who say, "Oh, where's the inflation?" It's a fallacious argument. What they did is they destroyed the will of the bond vigilantes, who actually do a great service for the market. Because when you encounter bad economic policy, bad legislative policy, the bond vigilantes would send a message going, you're way off base here. But they basically,
they destroyed them.
They destroyed them, and and they're dormant. You see them arrive every once in a while when. Right now, Gunloch is very adamant. If you listen to what he said earlier this week, he's put himself back in the role of a bond vigilante, talking about debt, the mal effects that are going to be coming from the debt, the flawed policy of the Fed. This is all bond vigilante stuff. Is Gunloch actually putting on positions? Well, he says, he's talking about playing that straddle on the TLT. As a way to make money. I don't know. That's not the way I operate, but it's worth watching. But he's trying to resurrect the concept of the bond vigilante and say, hey, the market forces are going to push back and they're going to have their day. The Fed says, okay, we'll see.
Yeah, here, you got a couple of, Michael put in a question here. He said, offshore HIBOR is off the charts when Fed tightened. Right.
That's right. And that's a good catch. Thanks. That's exactly what happened. That's right. And the Fed tightening has caused some havoc because it was putting upward pressure on the Hong Kong dollar. So that's a really good catch. So thank you. It's a great ad. You guys are really on top of your game. That's why I like coming here. It's a good. Because again, the greater, I can't stress it enough, the more interaction, the better the questions, the more we'll ferret out what really needs to be ferreted out, and which is basically is for the bottom line. Everything else is just commentary.
So I priced out some. I priced out a deal that was like essentially it was a digital. If Hong Kong dollar weakened above a set level, you got paid like 12% with no principal risk whatsoever for 1 year.
Yeah.
I don't know if that's enough, but his main thing was that, and I'm not going to do this any justice. His main deal was that they lost the ports. They still have the financial center as their main kind of draw, and everyone wants their money out of China into Hong Kong, so they've got that going for them. They said they lost the ports, and something about all the credit exposure resetting to HIBOR, in the front end.
Yeah.
And how it used to make sense, since it's a peg to the U.S. dollar, they're effectively just importing our monetary policy. But where it used to make sense, it no longer makes sense because they lost that trade to China via the Chinese building out their own port system. And that mechanism is what drove, or what may drive, them to abandon the peg.
I agree with it. He is going to be right. I just don't know when. Yes, they've lost the ports, but the Chinese in Beijing are not stupid. They understand the importance of this of Hong Kong, especially because Hong Kong's role as a financial center. There's been a battle between. In fact, I have sitting on my desk to go reread. I have it all annotated out already. Lee Kuan Yew's book before he died, the one he wrote that even Charlie Munger talks about. The fact that Munger was talking about it, the title of the book is The Grandmaster's Insights on China, the United States, and the World, because a lot of people maintain that Lee Kuan Yew, who was the Prime Minister of Singapore, his thoughts have all were relevant, are relevant, and continue to be relevant. And it was Singapore versus Hong Kong as to who would be the financial center of Asia, basically acting like either London or Switzerland. And his son actually came to the CME when I lost the election yesterday, so let me put that in. But when I was on the CME board, he actually came to visit because we were doing stuff with the Singapore authorities, through CIMEX, and he came to the CME. And he openly stated, this was like 2000, 2001, that their goal was to basically be the Zurich, and that they could be the financial center and the banking center for Asia, which I thought was, wow, what a statement that was, because, Singapore is just not that big. But, they've done a pretty good job of it, and the battle's still on between, I think, Hong Kong and Singapore. Tokyo, the Japanese just moved too slow to go after this over the last 30 years because it should have been their natural place. So and the Chinese on the mainland still utilize Hong Kong. So I think that your point is really well taken. We just don't know what their timeline, always with the Chinese, as we talk about many times when I'm in this room, we just don't know their timeline. And they have their own timeline. So, yes, Kyle Bass is going to be right. I just don't know when. And they'll have to figure out what the cost is going to be to break that peg, because there's going to be a cost to it. Because they hold a lot of dollars to support that peg over the years. So, but that may well play into the Chinese view with the gold market and everything else. So. There's a lot at play here. And these are time frames that are difficult to trade. They're great to think about, but they're not easy to trade. And we'll see. But
I just keep remembering how adept Bank Nagara was. At intervention. They were the best ever.
Judd, I was just going to go there. The Monetary Authority of Singapore, the Bank Nagara, which I actually knew the guys. Philip Toe was the second one. Kamal, who is, I think he was French Arab, who ran it. These guys were great traders, but it was a different time. It was the 80s, and they would time their interventions unbelievably. You know, a shitload of his money was made for people who had their lines of you know, who they'd have to deal with. So if you were a Citibank or a Chase or a Bankers Trust, and you had access because they'd have to come in and intervene through you, you would really get to see a lot. You know, ask Joey DeFranco.
Oh, yeah.
Email with Joey, you know, because Joey was a bank trader before he was ever on the floor, and a great yen trader, great yen forward trader at First Chicago. And these guys saw a lot of stuff go on that today it's all overwhelmed by the algos and high frequency guys, but there was a lot of interplay. And those guys, you're 100% right. Bank Negara, which was the monetary authority of Singapore, had a phenomenal presence in the market. And I don't remember them being wrong.
No, they got everybody one way. They'd come in, they'd load up, and they just rip them the other way.
Absolutely. So.
All right, guys. Anybody else have anything that they'd like to add or talk about? Other than S&Ps just went up to 77, basically, and just gave you 2 equidistant 20-point swings off the opening range. And now it's just back into the soup again.
Soup. Yeah, these are all great questions because they have relevance. You know, it's again the difficulty to time. Interestingly, the most I'm trading today of the equity markets is the Nikkei, because the Nikkei is a little bit of a lag in its rally. Yeah, just I'm not saying to do it, but pay attention to it because, of course, you know, dollar yen being through 110, people are automatically getting, you know, bailing on the Nikkei. But if you get a significant rally in the, you know, you've got a nice rally in the Nikkei, but if you get a significant rally in the S&Ps, pay attention to it. I'd like to know what was in that letter that Trump received. Oh no, I don't give a shit. I forget. I have to get that out of my system. It's just
yeah, I know. It's just repugnant. Here, Michael's asking.
It's beautiful.
I'm sorry.
Peter loves him.
The letter was beautiful, he said. So that's.
Oh yeah, beautiful. Yeah. it was a love letter. I don't know.
Magnificently, hugely great, lovely.
It's the greatest. It's the best.
Yeah, it's hyperbole. You know, God, I could really get nasty, but I have to help myself.
Yeah, okay. Here's Michael's asking another question. He said, "So you were saying the next target would be the Germans." He said, "How do we conceptually play that?"
He's on top of his game. I'm looking at the same thing, and you know, it's all this talk. So what do? Today, the Bund. For the last 2 days, the Bund has been strong against the French, and it's difficult to trade the Spanish. It's just market's so thin. But there's good volume in the Italian futures and the French futures. So I'm watching this. What we should be doing, of course, is because it's all of Europe, and that's why I talked about that the Euro Swiss. The fact that the euro has rallied against the Swiss is kind of mind-boggling here. So it must be that the Swiss National Bank is in. And this is, one day we're going to have to just talk about the Swiss National Bank, because what they've done here and what they continue to do is really fascinating and plays into everything that we're seeing. But they must be in, because the Swiss National Bank is actively trading, actually, and of course they're trading stocks as well as anything. And you said when the Swiss should gain against the euro as we head into these elections. It should. I don't know when, and they're giving you nice levels to sell against, meaning to buy Swiss and sell. I'm not doing it yet. In fact, I'm still playing the short side of the Swiss. I sold the almost the stone highs today, unbelievable. But I also sold some lower against the gold because this one. is fascinating to me in their relationship to each other. I'm thinking about this, and I'm thinking that if they go after the Germans, and I believe that they're going to go after the Germans, it'll put, now you could, of course, get short the DAX, but yesterday you would have gotten hurt badly or 2 days ago, because Siemens earnings were pretty good and it carried the DAX. You know, it's so weighted to so many of those, you know, big corporations that when a corporation really performs well, you could be long the S&Ps and short the DAX, thinking all these things and still get your ass handed to you. I'm keeping a core position on, believe it or not, long EWG and short the S&Ps in a fashion, and it's done nothing. I've had it on for 6 weeks and it's done nothing. I'm dollar for dollar, so it's really made no money. But I want it keeps me very attentive to what's going on. So I'm going to probably do this in the bond markets, because if he goes after them, will it be worse for Germany or will it be worse for the rest of the European Union? So I'm getting my work together. In fact, I have two charts in front of me that I just looked at. They're 3-year charts of the differential between French 10-year rates and Italian 10-year rates. And I have the same chart of the German 10-year, I'm talking about yields, versus Italian. Because the Italian will probably get beat up the most. That's my hypothesis, is that if anything, any threat that comes to Europe, Germany can absorb it in the short term. Italy's banking structure and everything else going on in Italy makes them more problematic. And of course, the French and the differential, and this always is an interesting thing to me, the differential on the French-German this morning, I'm going on the 10-year, is about 39 basis points. It was into about 34 last week. So you're already starting to see a little bit of movement as people try to position themselves. Because again, Europe is nothing without Germany. I don't care what Macron said. It's the German credit card that makes Europe possible. All these rates that you see, you know, Greek 5-year yields are below U.S. 5-year yields. Think about that for a minute. These were things that were 35, 40% when MF Global blew up. You know, these yields went insanity, you know, throughout that whole area of 2015, you know, when everybody thought that Greece was actually going to default on all its debt. But it's now lower. What a statement that is about the impact of central banks in the markets.
Well, look at this huge. Look at this huge. I'm looking at the Bund oats. I mean, I can't believe that gap from March.
Be careful of that, because the coupon differentials.
Okay.
So you know what? So yes, you know, those throw you off, and I know, Judd, we learned the same basis, but those gaps are only due to what coupon is on the bond in question. So the yields, so that changes the price dramatically, and that's what you see there. Okay, so I just offer caution with the way that we would usually look at that.
All right, good to know.
But Mike, that's a very good question, and I'm still working my way through it. And this is the problem of focusing on the tariffs, because the market is now so parochial in its vision that we're 2 weeks away from this election. Nobody's talking about it. Nobody's talking about Iran. And Iran is a significant issue here. The fact that Pompeo, you know, canceled his trip to Germany to go to Iraq, is things like that don't happen willy-nilly. And again, you know, I invoke the fact that Trump doesn't like, he's pissed at Merkel because Trump takes, you know, he's such a narcissist. And again, it's not a political statement. It's just a fact, the way he operates. And when it was a year ago in Canada at the G7 meeting, when Macron and Merkel, there was that famous picture that went around viral around the world of Trump sitting there and them leaning on the table, staring Trump down. That didn't sit well with Donald Trump. And he you know, it's like I tell people, it's like my wife with her family, you know, they were an I got you last. You always had to get that last hit in. You had to get the last flight in. That's Donald Trump. Donald Trump is like, I got you last. You know, he's got to get, so it's just the way he operates, unfortunately, and it makes life difficult when you're trying to operate this, but you learn to live with him, and that's what we've all had to do. But that's why I think he's going to go after Germany. They're vulnerable. And again, this whole thing with China started because Trump kept saying how vulnerable they were. Their economy was slowing. Their stock market was so he looks for these vulnerabilities, and I think that's something that we have to pay attention to, because who's vulnerable? Germany, right? Well, I'm not saying Germany's vulnerable. Germany's actually doing pretty well. But if the global economy comes to a, you know, comes slowing down even more, Germany will be more vulnerable. But they're not the most vulnerable in Europe because they can sustain it far better.
Hang on one second, Ira. Here,
Yeah.
Angela, what is this? Washington seizes a North Korean carrier over sanctions?
The boat was carrying machinery and coal and all that shit. So they weren't supposed to be.
Yeah.
It was all sanctioned stuff. So the U.S. seized the ship.
That's been out for a while, by the way.
Yeah.
That's not new.
Okay.
I saw that about an hour ago, and I was looking for, you know, things that ought to have been moving. Really not much, you know. Again, but there's so many balls up in the air, and yet when you look at the way volatility is priced, you go, huh? You know, because I know the VIX has jumped, but I'm more than just a VIX. I can look at, again, gold vol, currency vol, bond vol. It's all so cheap, and yet there are all these things. The question about Europe, and the European elections are enormous, from so many different levels. And next week we'll spend some time when I call in talking about it. But these are good questions, and we should be looking at ways how to attack it. And I think the major vulnerability, of course, if the elections come out in a more positive manner, being long Bunds and short the oats or short the Italian, you're going to get hurt badly, because the market will set up in a negative fashion, because that's the way the initial polling has been indicated. So we have to look for opportunities. It may make sense, Michael, to maybe if they beat the shit out of the Italian, it might make sense to butterfly the whole thing and buy the Bunds and buy the Italian and sell the French. That's, you know, I play with that spread all the time, the butterfly, because there's times when they just whack the Italian for no reason because there's some headline here or some headline there, and then it corrects itself. And don't forget, still, you have the European Central Bank still buying. They're not buying fresh, but there is stuff that comes due that they replace. So they're involved in the marketplace too. This is difficult, but I think there is going to be opportunity. I just think we may be a little bit early. The interesting thing has been that Euro-Yen cross, and I'm glad it corrected a little bit today, because that's been a major mover. And again, use those January 3rd dates, you know, when we had that flash crash in the yen, as a way to see where we are relative to that, which was supposedly a one-off event. And it was for about 4 months. But now we're coming and challenging those levels. So when I put my risk factor together, and I'm all about coordinating my risk and knowing where I'm at, that's what I'm going to be looking at.
Ira, can I ask you one more Germany follow-up question?
Absolutely. The more you ask, the more you make me think, and I appreciate it.
And there's a very specific reason why I'm asking it this way.
Yeah,
If Germany had a trade deal directly with the U.S. and directly with China, what do you suppose they would look like?
Oh my God, I can't answer that, but that would, first of all, the French would go crazy. That would be blasphemous for the entire EU if Germany carved out separate deals?
Well,
Yeah.
sort of, but I was presupposing that Germany finally has enough with the whole damn thing and carves out some sort of regional thing.
I'm going to tell you what, if you see that, wow. Oh,
Because how much pain can the Germans take?
Well, the Germans are taking a lot of pain, but you're seeing it in the politics. You know, and you know what? I read the FT, and sometimes I just get, and more importantly, when there's an op-ed piece that that I'll read because it may be written by somebody I find interesting, then I read the comments, and there might be 250 comments, and a lot of it happens to be because of what the FT has become, which is the echo chamber for the Europhile, for the pro-Euro forces, and they all show up there to comment on this, that, and the other. So I read them just to get a sense. Sometimes I'll actually. What's that?
I said thank you for that. You're just so right about that on FT.
So I'll actually respond at times just because I might be pissed because I had a bad trade on, so I'm just looking to slap somebody in the head. And the comments that come back to me are just like, they're ridiculous. They got their heads so far up their asses, because the media wants to tell you that everything in Germany is because of Merkel's immigration problem. I'll tell you what, the AfD, the Alternative for Deutschland Party, which is the quote-unquote alt-right, started first as a response to what Draghi was doing, because there was no immigration at that time. They were a group of economists, prominent economists, who started a political movement because they were killing the German people. And again, the Germans are savers. So when you financially repress, and that's the right phrase, by the way, financially repress. Vince Reinhardt, who was on with Santelli this morning, who I didn't used to like him. He was the chief economist for New York Fed, and I've actually been at dinners with him and talked to him. And I'm not name dropping. I didn't like his attitude, but he's gotten better. And I told Santelli that too. He comes across, but his wife, Carmen Reinhardt, is just phenomenal. And she's written mega stuff on financial repression over the years, and going back to World War II. And she's really, her stuff is really good. And she talks about financial repression. And the whole European Union now is existing because they're squeezing the shit out of German savers. You think about that. If you're a saver, which Germany is prominently, they're not stock players. They don't borrow money. They're not real estate. They're prominently savers. They're getting killed, and it's just like in America. Santelli's whole movement. When Santelli called out everybody out with the Tea Party was built upon the idea that they were crushing people who, quote unquote, did things right. They didn't borrow a lot of money. They didn't take out more mortgages than they could afford. They did things right. And then they got financially repressed. And of course, we knew from Bernanke and Yellen, they both basically said to anybody who felt that way, shut up, because the whole country was benefiting, even though if you weren't, and your house prices were going up, your stock prices were going up, and that was a response. But the bottom line is, and this is what they missed, people my age and Judd's age are if you were a saver, if you owned bonds, if you put money in the bank, you got killed. And that was what their objective was. So you've had to work. I know a lot of people. My brother is a doctor. He was not set up for that, and he's extended his work life out. He just turned 74, and people are going to be working because if you were conservative in the way that you approach your savings, if you had money in CDs, if you went down to zero, and all of a sudden you looked at your retirement and you go, I can't retire. And this has been a big part of them misunderstanding the employment situation anyway, because, the group that had the greatest job gains throughout the 13, 14, 15, and 16, and 17 were people 55 and older. So there's a lot of things that have gone on here. But in Germany, they're killing these people. They're killing them. And there's a lot of political backlash. And the mainstream media wants to only tell you that it's because of, you know, the forces of hate. It's just not true. You know, they've asked a lot of the German people. Now, if you're sitting in France, you'll say, yeah, but you benefited. You've gotten a weaker euro. You're exporting the shit out of everything. You've had the best of all. Okay, that may be true, but so what are you asking me now, to forfeit everything? And there's a critical argument that will go on, and it's called, is the European Union, and smarter people from Bernard on down have asked this question, is the European Union only a transfer union, meaning that Germany has to transfer money? So if Germany earns $400 billion a year in its current account as a surplus, should they send out $250 billion to the rest of Europe to aid and abet everybody, like we do in the United States? But they don't have that fiscal harmony. In the United States, we do it. You know, New York sends money to Mississippi, Alabama, Georgia. You know, that's part of the fabric of the republic. But Europe is not that far along, but yet they're asking the same thing of the Germans. And truth be told, the German people have never voted for that. You know, there was never a referendum in Germany about whether the German citizenry ever wanted this. So,
I'm sorry.
yes.
Doesn't that then bring in and how they account for it with those target 2 imbalances? Aren't they pretty large? Should they break up, not only with the, you know, the German currency skyrocket, right? But don't they owe the other debtor nations the imbalances in trade, and it's tracked over via target 2?
That's the greatest point I've heard. Really, you're so spot on. I haven't heard anybody discuss it in so long because we're so busy talking about other things. But those target 2 balances, because look at, if I'm an Italian, I'm not a moron. I'm in euros, but I can hold my euros in any, you know, if they're euros, I'm not changing currencies. So if I put them in German banks, because I believe that German banks are safer, we can argue about Deutsche Bank later, but if I put it in German banks, yeah, that's what target 2 is. So you have all these people moving their money into Dutch and German and Austrian banks because you're still in euros, but I may as well be, why should I be in an Italian bank? They're not paying, you know, okay, if I'm in Italian bonds, government bonds, that's one thing, which is what the Italian banks do. So whatever deposits they have, they're going in and they're buying Italian sovereign debt because they don't have to reserve against it under the law, the banking laws. So that is an absolute great point, and it puts, that's the way that they're fucking Germany and tying them up. It's the same thing with what Draghi did with building that balance sheet, because the only way out, you get it so big that the only way out for the European Union is to fold the entire ECB balance sheet into a euro bond. That's the only thing that saves the European Union. And if they announced that they were doing that in some fashion, then you'd want to be short the Bund and long everything else, because everything else, maybe not the French. That's why I always say, if you really want to make a play, when Bill Gross was saying, oh, short the Bund, I said, no, short the French. You don't want to short the Bund. The Bund has other attributes to it. So if you saw them do that, then you buy up everything, because then everything has to go to, then it'll be a unified thing, and everything will like basically should come to zero. But we're so far away from that, and that's off. Who knows when that'll happen? But if the Germans were tomorrow say, you know what, we're having second thoughts about this, the world will go into a major financial calamity. Because again, there's so much. The European Union has gotten so big, and the amount of money involved in this in euros, and in this whole guarantee, who guarantees what, would start to blow apart. It would be a major debacle for the global financial system. Major debacle. Then Gartman will really be right on his gold euro play, but we're not there yet. And the Germans haven't gone that route yet. And they can't, and the longer that this puts off, the more they get trapped here. So, but this is the true existential question about Europe. How far are the Germans going to go, or are they not going to go? And that's what Europe is playing for, time. And Macron needs to shut up, because all he's doing is irritating things in Germany anyway. Every time he opens his mouth, every time he pushes for something, the French try to punch way above their weight. And you know what? It causes problems. He needs just to shut up. And the Italians know how fragile it is, so they open up their mouth and push back. So
I think
these elections are really going to be. Yeah.
Ira, you know, what do you think about this? I think the Italians have lost so much industry to Germany. Germany's been running a internal trade surplus in the European Union so long, and I think the Italians have figured, not only because their debt is totally unpayable, but that they're economically not competitive, that they're going to try to screw Germany and screw the ECB somehow on their debt. And they figure that, you know, in a risk analysis for them, they figure that's the way to go. So they're starting it by saying whatever the hell they want right now.
Listen, whether Italy's lost that much, you know, the French have lost probably more, and the French state is so involved. You know, I think the French government, the actual is 56% of GDP or something. It's a high number. How much involvement the state is, and French banks are vulnerable, just like Italian banks are vulnerable. Yeah, and the Italians know, hey, you can't walk away from us because it's just too big. And if we and the French could never allow, you know, when the Italians were talking about creating their own currency again, it would kill France, absolutely destroy France, because the French and Italian industries compete on a lot of bases: fashion, design, even, you know, aeronautics. There's a lot of, in northern Italy, there's a lot of really great industry. And the French knew that, and in that, you know, when the Italians came back in 1997, when they repegged the lira, or 98, to the Deutschmark in order to get ready for the euro, the French forced the Italians to take too high a currency level. They did that by design, and the Italians knew it, because there was a lot of acrimony going on between the two. And there was a line said, I can't remember who said it, but one of the Italians was so pissed about it that he said to the French, he said, look, if you want to lie, we'll teach you something about lying and phoning the books. So, you know, this stuff is very complicated. And I'll throw one more thing at you, because when the Maastricht, this is all about, because when the French voted on Maastricht and everybody else was voting on Maastricht back in 1993, you know, it only passed in France by a 50.2 to 49.8. And that was probably bullshitted anyway. That's how close it was. So Europe is not, it doesn't rest easy. I know that people don't want to think about it because there's, again, so much more crap, you know, that we're forced to think about, and where our focus is at. But Europe is, after we come out from under the tariffs, and again, of course, the tariffs also affect Europe because Germany is certainly a massive exporter. But, you know, we have to remember, too, that Germany runs a bigger current account surplus than China. I think the German current account surplus is about 8.5% of the GDP, which is an enormous number, but tells you how much Germany saves. It's much bigger than China on a GDP basis. It may be on an actual basis too, that their current account surplus. So you know where they're coming next. I don't say that lightly. It just is. It just is. It is so much of what exists out there, unfortunately. But how to best play it? I'm sitting there thinking it as I'm watching markets, how to best play it. And I don't have, I'm really leaning on that butterfly, but it's not, I don't have any really good, everything with me, and I know, Judd, you stress it, and everybody in this room, it's all about the location of risk, where I can create my greatest opportunity for the least amount of risk. And I don't have a point of that in any way, shape, or form yet.
Well, thanks, Ira. I mean, that was just great. As Michael said, I'm enlightened. And
No. You guys really, these points today were so great. It was unbelievable. So I'm right with you. I'll be back next week, probably Tuesday, I think.
all right. Look forward to it.
All right, thanks.
All right, thanks.
Okay, thanks.